Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is my good friend Clive Thompson. Clive has had over 47 years in career and trust and wealth management and Swiss private banking. Clive, welcome back.
Hello, Ivan, and thank you very much for having me back on your show. Is this the second time I'm on your show?
Yeah, this is the
I think it
second
is.
time. Yeah, it's the second time, and it's such a huge pleasure having you come down to Wall Street Silver. I wanted to get you on to talk about all the excitement that's happening in the silver and the gold markets. First, let's start off with silver, though. What is happening? A lot of people are saying like this is the moment silver is really taken off. What's your view?
For a long, long time, at least the last 2 years, I've been looking at the silver price and buying a little bit of silver here and there and saying, when's it going to move? Because silver, I've taken the view, and I still take the view that it's an extremely undervalued metal. And it was very frustrating. It would go up, and then you get excited, and then it goes down, goes up, goes down. And finally, I think on Friday, we probably had the most exciting day. It broke out of its trading range. The the resistance was at $32.50. And at some point, after European stock markets had closed, it crashed through the $32.50 mark and soared a massive 6.8% on the day.
Wow.
It was an incredible, incredible move because silver doesn't normally move more than 1 or 2%, nor does gold. If you have a 1% up day in silver, you get excited. So 6.8% on the day was very exciting, especially on a Friday. I like to call Fridays Smackdown Fridays because typically on a Friday, you see the shorts, the big boys. These are the big banks who are providing the other side of the market for the retail buyers. Typically on a Friday, they come in and push the price of precious metals down. It's not every Friday, but it seems just to be just all too common. As we go into the close, the price will come off very rapidly.
Right.
Some people say it's the retail seller um, unwinding his positions ahead of the weekend. I think it's the big boys going short ahead of the weekend, so that the prices don't seem to be taking off because they make money when it doesn't take off, and
Right.
they try to destroy the market. But Friday was unusual because we had no SmackDown Friday. The price rocketed ahead. Gold barely did anything. It was, well, I say barely did. It was strong. It was up 1%, which wasn't too bad. But what this has done on Friday, it's triggered a lot of short covering.
Right.
So certainly in the North American continent on Friday evening, there would have been quite a bit of short covering as it went higher. And then I think going into Monday, Tuesday, uh, those institutions which have got short positions must be paring them back a little bit. They'll be thinking, we don't want to take too much risk, so they'll reduce the size of their short positions. I
Right.
don't think they're taking it off the table yet, but I think that's the direction. So it was an exciting day. Do you want to talk about the fundamentals for
Yeah,
silver?
absolutely. What are the main fundamentals for silver? That would be incredible.
Supply and demand, of course, are the most important things. The supply, the main source of supply is mined silver.
Right.
You can go to the Silver Institute website, and they have the supply and demand from various sources going back a decade. Anyone who looks at that will see that the supply of silver, mined silver coming out of the mines, is going down every year.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. Is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use, so that instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Hmm.
It's down this year, it's down last year, down the year before, and it's down on the figure from 10 years ago. So what's coming out of the ground is going down. And that's despite the higher price we're looking at over the last year or so. The reason it's going down is because silver is largely mined as a byproduct of other metals, such
Right.
as copper. So the fact that the price goes up doesn't, certainly not in the immediate term, produce any more silver coming out of the ground.
Hmm.
And the real fact is silver price has gone up a lot over the last decade, and the amount coming out of the ground is virtually, well, it's down.
Do you
So
do you
that
think that'll get worse, Clive? Do you think over time, because obviously the data is showing right now that we are in a, there is a deficit. But do you think as like let's say by 2030, what happens? Who's not going to get their silver? Investors or
Well, for sure, there will be over time, and it takes a long time, some new sources of silver coming out of the ground. If we look at the existing silver miners, many of them have resources which were unviable when silver was $20 an ounce, but
right,
that silver will be viable at $30 an ounce. So what they will do is start to borrow money from the banks to buy more machines
right.
to start to dig it out. But that's going to take that's going to take multiple years. It's not something which happens overnight, and they don't make the decision instantly. They need to see the price sustained at the higher levels.
Right.
But little by little, more will come out. But having said that, the demand side of the equation is the most exciting bit. We have seen in the last few years the demand for silver rising strongly.
Hmm.
So if we go back a decade ago, there was much more silver coming out of the mines than was being used. By 2022, we had a crossover where the amount of consumption for industrial and electronic use and jewelry and silver plate exceeded what was coming out of the mines in
Right.
2022. The shortage or the deficit became larger in 2023 and is forecast to become much larger in 2024. Why is there a shortage? Well, it's due to the consumption from electronics. The electronics, which is the biggest usage of silver, is increasing by 22%, 20% a year, roughly.
Oh,
And a
really?
subcomponent,
20% a year.
20% a year. Yep, it is. And a subcomponent of that is photovoltaic, which I think in 2023 increased something like 40%. But that's a
Wow.
subcomponent of electronics. But the electronic use is rising by 20%, and that's pushing up the overall use of silver. So that increase in the use of silver in electronics is just not going to go down. We're not going to have less electronic devices next year than we had last year. It's
No.
only going to go in one direction. Now, they may find some substitute for silver, but there's nothing that I'm aware of which is on the horizon. So if you need a really good, really fast connection, microscopic connection, it might need a tiny microscopic bit of silver in your device, but it's got to be there to make sure the device doesn't fail whereas it might fail with copper, which, for example, is going to tarnish more easily. I don't know why copper and silver beats copper, but certainly copper is silver's the best conductor we know. Copper's the second best.
Absolutely. And a lot of people are talking about online about, the use of not only just electronics or like silver and electronics, but even in like military applications and bombs and yeah, there's so many different applications for silver that people don't know about. Now, what do you think is next, Clive, for silver? Do you think silver now has really broke a critical moment where we're on our way to $50 silver? What do you think?
Well, first of all, the supply and demand equation, which is very much not enough supply to meet that demand for use, doesn't include investment demand. So
Wow.
if I add investment demand to the demand, and of course, when you have a rising price, it encourages investors to come in and put it
Yeah.
into their portfolios. So that could really boost silver as it happens. Now, investor demand isn't going to sort of suddenly reappear magically overnight. It's one of those gradual things. I think the real investor demand would come from the asset allocators, the banks, and so forth, and that will take several years to come into place. But it might start off little by little in some places. Already, some banks, quite a few of them, have started to add gold this year, but there's a long way to go, and their allocation to gold is still pretty small in general. Most banks who've added it at all have topped out at 5%.
Right.
And those who topped out at 5% are probably coming from 3%, and the ones who are at 0% are going to 3%.
What
Now,
happens? Oh, sorry, Clive. What happens when we move towards a world where like you see Canada, they sold all of their gold reserves a while ago. You see a lot of these countries, they don't have any gold reserves or precious metals. When it does come to a point where, all these fiat currencies start failing simultaneously around the world, what happens to these countries with no gold?
well, I think they're going to hypothecate the gold they've got in the ground. I mean, that's basically what's been happening with the gold miners anyway. They'll go along to a large bank like JP Morgan or Goldman Sachs and say, "Look, we've got all these reserves.
Oh,
Lend us some.
interesting.
It's in the ground. Lend us some gold." They don't say lend us money; they say lend us gold, which the JP Morgan will probably borrow from, I don't know where they get the perhaps from the Federal Reserve, or the Fed hasn't got, the Fed has got no gold, perhaps from the Treasury. I don't
Right.
know. Of course, the gold doesn't actually change place; it stays where it is, deep down under the ground in the vaults. But the little yellow sticker attached to that bar might change the name of the person who's temporarily the owner of it.
Right.
So what one of the bullion banks would borrow some gold from somewhere, lend it at a higher interest rate to the gold miner. The gold miner would instantly, simultaneously sell it. Of course, that's all done by a computer in a
Right.
twinkling of an eye. And then the gold miner now has the money to buy the extra digging machines and hire the staff and all sorts of things. But the gold miner now owes gold.
Wow. Two
It's
JP.
not they haven't borrowed cash. They owe gold, and as they dig it up, they repay the bank from which they
I
borrowed it.
I didn't know that's how it works.
But of course, the problem with this is there's a little thing called margin calls. So if you borrow gold, it's all very well that you've got the gold deep down in the ground and you can dig it up in 5 years' time.
Right.
But the problem with that is when the price rises, the bank expects you to stump up extra collateral. So each bank will have its rules as to what it accepts as collateral. It might accept your digging machine, it might accept the
Really?
gold in the ground, but more likely it's going to say, we want cash, or we want your current production, or whatever it happens to be as collateral. So
Wow.
if the miner can't provide that collateral because it doesn't have it in a liquid form, what happens is the lender says, if you can't supply extra collateral, we'll buy back the gold that you lent us. That we lent, we'll
In
buy
the
back
mine,
the
in the
gold.
ground.
We'll buy back the gold on your behalf.
Yeah.
Not we won't buy the gold in the ground. We'll buy the gold in the spot market,
Oh,
and that
okay.
has the effect of leveraging up the price. Now, I don't think we're there yet, because when a gold miner borrows gold, they will leave if they've got any brains, they will have left a lot of leeway. But probably at $2,000, they thought $3,000 is enough leeway. We can manage that, but at $3,000, we're going to have a problem.
That's right.
Well, we're getting there. So I think there's a danger that there will be a squeeze on the shorts, and the shorts will include the gold miners because they borrowed gold, so they
Right.
owe it. And as I said, the banks aren't going to say, "We trust you. You got the gold in the ground." They're going to say, "We want some money collateral today."
Yeah, that's true.
So that's potentially coming for gold and silver. It could drive the prices a lot higher. Um,
Wow.
I think for the gold price, we probably should be closer to probably over $5,000 at the moment, would be where
Wow.
I would put a fair value.
And
And I
that's a
think that's,
conservative. That's conservative.
well, I know that's conservative with many people, but I think that's the direction of travel. Of course, we can't really get there overnight, but literally, if you see the gold price, literally every time it goes down a little bit, buyers from somewhere are coming in.
Yeah.
And and who are these buyers? Well, it doesn't appear to be the public at large yet, because if you look at the gold ETFs, certainly up until a couple of months ago, they were being drained of their gold. The amount of gold in the ETFs, the
Right,
gold
right.
ETFs, was going down. So that meant that in general, the public were not interested in gold. They were selling out to buy Nvidia or Microsoft or Netflix or Apple or whatever the hottest thing on the planet was.
Right.
Um, so what they sell their ETF, because it's in the same place in their Robinhood account. It's in the same place as they can buy Nvidia.
Right.
So a lot of people were selling, saying, God, look, I've got this gold. I've had it for 10 years. At long last, it's reached my purchase price. I'm out.
Oh, that's crazy.
Because there's something much hotter. AI is the future. Obviously, AI is going to go to the moon. I'll double my money in 6 months. That's the way to go. So a lot of money. People have been looking for money to invest in this very exciting part of the market. So they think, and they might be right. I don't want to say they've got it wrong, but that's where the money's been going, and it's been
Yeah.
coming out of the gold. Now, money has started to flow back into the ETFs slowly at first, but most of the rise of the gold price happened at a time when the public was selling their gold.
Right.
So what's going on? Someone else is buying it, and I think the main buyers are the central banks.
Yeah. No, I totally
And
agree with
what
you.
and why are they buying? Well, they not sure they're going to get paid in anything valuable, so
Right.
they'd rather have the gold than the treasuries.
Yeah, no, that totally makes sense. Clive, you know, it's such a pleasure having you come down to Wall Street Silver, and what an incredible time for precious metals, gold, silver, everything all around. But it's such a huge like pleasure having you come down to Wall Street Silver. Where can people connect with you? I'll put your LinkedIn in the description below, but where can people connect with you?
Anybody who wants to write to me via LinkedIn, if they've got a question, I'll be very happy to answer it. I don't charge any fees. I have nothing to sell. I have nothing to promote.
Oh, that's
I'm
nice.
doing it because I'm now retired, and I like to share the information and knowledge that I've gained over the last 50 odd years in investing with those who perhaps have a little fewer years of experience. So I'm not giving out general lessons or anything like that. But if someone's got a question about what's an ETF, or how do I do something in the stock market, or do you think it's a great time to invest in copper miners, whatever it happens to be, I'm very happy to try and give them a view. Maybe not investment advice, but certainly try and point them in the right
Right.
direction to see if their thought process is sound.
Yeah, no, I really appreciate that. I'm gonna put your link in the description below. Everyone who's watching the video, please like the video, and yeah, thank you so much, Clive.
You're very welcome. Thank you very much, Ivan.
Talk to you soon.